Today, we will talk about top 10 stocks to buy and hold for 2023. So before we get started, make sure to hit that like button, also subscribe to my channel. The year 2023 was a lousy one for the stock market. Even after factoring in dividends, the S&P 500 fell 19.4% in those 12 months, while the tech-heavy Nasdaq composite took a 33.1% haircut. The catalysts behind Wall Street's sell-off are all too familiar: inflation, soaring interest rates. 1. Apple Incorporated. First up is Apple, the largest publicly traded company in the world. If you exclude government-backed behemoths, such as oil giant Saudi Aramco. Like other tech stocks, AAPL shares had a rough go of it in 2022, as recession fears and soaring interest rates spooked investors in the sector. Following a rare 26.4% pullback in 2022, Apple now trades at 26 times earnings, offering investors a sound entry point into the $2.5 trillion iPhone maker. Although its most recent earnings report technically missed expectations, that was more due to supply chain snarls than demand issues. 2. Dutch Bros Incorporated. While massive, established companies like Apple can offer investors some stability, smaller companies have more room for expansion and can boost portfolios. Enter the rapidly expanding coffee chain Dutch Bros, which for comparison's sake is roughly 0.2% the size of Apple despite being worth about $5 billion. Revenue is growing like a weed, surging 48.4% in 2022. With initial roots on the West Coast, Dutch Bros locations are almost entirely in the West and Southwest, with 671 locations in 14 states through the end of last year. The small footprint of its drive-through stores means they are relatively cheap to open, allowing for faster expansion. 3. Citigroup Incorporated. Next up is Citigroup, a nearly $90 billion multinational bank with both retail and investment banking arms. What Citigroup offers investors is twofold. First, it pays a healthy 4.6% dividend yield, which is a nice buffer for shareholders in an era of rising rates and high inflation. Importantly, that dividend is sustainable over time, with Citigroup using less than 30% of earnings to finance its payouts. Aside from its high dividend, Citigroup also looks like a value stock at current levels, trading for 7 times forward earnings and just 0.47 times book value. Famed investor and financial guru Warren Buffett began buying Citigroup stock in the first quarter of 2022. 4. Amazon.com Incorporated. Dominant internet retailer Amazon was also named one of the 10 best stocks to buy for 2023, heading into the new year after a miserable 2022, in which shares lost 50% of their value. The culprits included cost inflation, a tight labor market, supply chain challenges, and dwindling consumer confidence. That said, the market was far too eager to write off Amazon, whose crown jewel is Amazon Web Services, its large, fast-growing, and massively profitable cloud services arm. AWS has an annual revenue run rate of more than $85 billion. Given cloud services rival Microsoft Corp, MSFT trades for about 10 times sales. Putting the same multiple on AWS pegs its value at $850 billion. At Amazon's current $1 trillion valuation, investors are getting the rest of the company's massive operations, which posted 2022 sales of $434 billion, for about $150 billion. Amazon has proven to be a good pick thus far in 2023, with shares up 17.5% through March 23. 5. Walt Disney Co. One of the most important things to consider when selecting stocks to buy and hold for the long term is a company's management team. And with the recent return of longtime CEO Bob Iger, Disney has that in spades. Considered one of the best CEOs this side of the millennium, Iger presided over a series of wildly successful acquisitions, including Pixar, Marvel Entertainment, and Lucasfilm, before passing the CEO role to Bob Chapek in February 2020. Disney's February earnings report, the first since Iger's return, saw the House of Mouse topping expectations for both earnings and revenue. After a price hike for streaming service Disney+, subscriber losses were lower than feared, while revenue from its theme parks soared 21% in the quarter. Iger seems not to have lost his magic touch. DI's stock is beating the S&P so far in 2023, with shares up 10.3% this year, through March 23. 6. Dollar General. Dollar General is an established chain of discount stores selling consumer staples for low prices in neighborhood locations. The company sells its own private branded goods, alongside popular products from Clorox, Procter & Gamble, Coca-Cola, Kellogg's, General Mills, and more. There are more than 18,000 Dollar General stores in 47 U.S. states. Dollar General stock is up 3% in 2022, even as the S&P 500 has fallen nearly 20%. Throughout this year, the chain has reported increases in foot traffic and in how much customers spend at each transaction. Dollar General is feeling the pressures of higher costs, though. In response, company leaders are focused on streamlining their supply chain. Those efficiency efforts can help with the current inflation trend, but will also create long-term advantages. 7. Eli Lilly. Eli Lilly is a pharmaceutical company that develops important treatments for diabetes, obesity, Alzheimer's disease, immune system disorders, certain cancers, and COVID-19. The company distributes its products around the world through wholesale distributors and marketing agreements with other pharma companies. Eli Lilly's stock is up 31% in 2022, an uncommon bright spot in a down market. The company benefited from a third-quarter launch of its type 2 diabetes drug, Mounjaro, plus growth from breast cancer drug Verzenio, diabetes drug Trulicity, migraine drug Emgality, and others. 8. T-Mobile. T-Mobile provides voice, messaging, and data services to more than 100 million customers in the U.S., Puerto Rico, and the U.S. Virgin Islands. The company's two brands are T-Mobile and Metro by T-Mobile, formerly Metro PCs. 9. Wells Fargo. Wells Fargo provides banking and investment services to consumers and businesses. The financial services company serves 33% of U.S. households and 10% of U.S. small businesses. Its lending operation also has a stronghold with mid-sized U.S. companies. 10. PayPal Holdings Incorporated. A time-tested and well-run financial stock, PayPal is curiously trading for less than its 2020 pandemic lows, despite earnings per share of $4.13 in 2022, higher than any year between 2018 and 2020. Shares were absolutely hammered in 2022, shedding 62% due to a weaker macro environment and the loss of its lucrative relationship with eBay Incorporated. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.